It is, yes. Perfect. Perfect.
Good morning, everyone. I am Rob Curley, the editor of the Spokesman-Review, and today we are having another one of our virtual Northwest Passages community forums. This has been a forum that we've wanted to do since all of this weird COVID stuff first began, which is what does all of this mean to the finances, not just worldly or regionally, but also right here in Eastern Washington and North Idaho. So to do this, we reached out to Numerica and asked if they had a financial analyst that we could speak to, and that's who we're meeting with today. We're going to be speaking with Jana Erny, who has been a financial analyst in this region for almost 22 years. So she has a title over there at Numerica that's senior vice president, and then like 18 other words. So it's really important. I don't even know how it fits on one card. So we're going to go ahead and start. We have a ton of questions, and I want to remind everyone that you can ask questions too. There is a box on our streaming page where you can submit questions, and we'll get to those. So, Jana, thank you for being a part of this morning.
Yes, thank you for having me.
Well, I want to start off at the biggest level, the macro level there is. What does this? All the things that we've seen over the last few months, what does this mean to the world, the kind of the view of the world financially, the view of the region, the nation? I mean, I think all of us are confused what all of this may or may not mean. So I think let's start at the biggest level. What do you feel like the implications of this might be to a worldview?
Yeah, that's a great question. So we are undeniably in an unprecedented time right now, and we are all living through history in the making. What is happening right now will be written in history books and taught to generations to come. And it truly is a unique time. What it means, what is so unique about this time is that it's not it's not a specific industry or sector of business that's impacted. We are all in this together. So the entire world is impacted by the current events. So when we take a look at what that means nationally and in the US, we've been really in a record-setting economic growth pattern since 2009, and there's been a lot of opportunities presented. Many have benefited from this growth that we have experienced, and we may very well be seeing that growth pattern come to an end. And so, while this record setting growth that we've experienced for the last decade has been a little slower than past economic growth periods, it's been consistent, which is what has led to this record setting time. So much of There's so much uncertainty that we're all dealing with, and we don't know the long term impact. But what we do know is that the length and magnitude of the financial impact is largely dependent on how long the COVID related shutdowns last. And we just don't know. We're starting to see many states phase in reopening their states, but again, there's a tremendous amount of uncertainty. When I think about our local communities, I look at the impact of employees who have been laid off because businesses have been forced to close. I look at the impact of small businesses. Just a fun fact, 49% of private sector employment is from small businesses. And so for our communities to continue to thrive, we really need to be supporting the small businesses. There's just uncertainty also when we look at businesses when they do start to reopen. What does it mean to reopen in this new normal, which will have an impact? So restaurants, for example, as they begin to reopen, they don't get to open at full capacity. And so businesses, as they open, they'll be opening in a new normal. They'll have to figure out how to open with social distancing in play. And they'll also have to take new precautions as it relates to safety for their employees and people coming into their business. Really, when I think about local communities, another point that comes to mind is really supporting local. So there's things that we can do right now to support local. Many businesses that are closed for business as far as having people come into their business, are offering things like gift certificate purchases. Gift certificates can be used then when the business does reopen. You can purchase your plants for gardening at local nurseries. You can also shop at local clothes boutiques as they begin to open. So, that's a very broad question. And there's so many ways to answer it, but that takes it from world to the US to local.
So let's go down even lower. Like, what about me? Like, what if there is somebody who has been laid off, hasn't received an unemployment check, and they're really sweating it? How do they even go? Where do they even start?
Yeah. So the first thing is you're not alone, and we are all in this together. So we know in many communities, unemployment has been delayed for 5, 6, 7 weeks. And in those situations, at the first indication that you have that you're not able to potentially pay a bill, reach out to your creditors, partner with your financial institutions to find out what options are available. So during this time, banks and credit unions are offering skip payments, they're offering deferrals, and you also hear forbearance come up. I do want to address the difference between deferrals and forbearance, which is there are some differences. So if you talk to your financial institution about getting a loan deferral, for example, a loan deferral for 60 days would take 2 months worth of payments and apply it towards the end of your loan. A forbearance, which is often offered for mortgages and HELOCs, for example, if you take a 60-day forbearance, when your payment is due at that third month, you have to pay the first 2 payments that you missed in addition to that third month's payment. So at 90 days, you would actually be making 3 months worth of payments all in one lump sum. So that's an important differentiator between a deferral and a forbearance, one that you definitely want to keep in mind.
So no,
go
so
ahead.
that's very important, and I people in my shoes don't know the difference between those two. So that was very helpful. You're pretty much talking about how do you manage bills during this time, and unless I'm hearing you wrong, it's be very vocal, like be calling any creditors. Is that what you're saying?
Yeah, 100%. Be proactive about it, and be transparent with your financial institution and your creditors. Like I said, the unique thing is we're all in the same boat. And I saw a meme, I think it was on Facebook or something, that said, well, we're all in the same storm. Our ships look a little bit different. And I thought that that was a really cool way to articulate what is happening and how everybody's situation is unique and does look a little bit different. However, we're all in this storm together, and reach out to the experts. Don't be afraid to talk about what's happening in your financial life. Coming up with solutions will assist you with living well and reduce your stress, specifically during this time of uncertainty.
So, well, let's switch gears a little bit. This has been a relatively hot housing market. I mean, we're not seeing the massive uh, housing costs that you see in Seattle, but we have had this steady growth. What does this mean to both potential home buyers and potential home sellers? I mean, what does a housing market forecast look like on both of those sides?
Yeah, we've been in a housing boom for many years, which has been absolutely incredible. Refinances are up right now because rates are very low. Now, with that, unemployment rates are also very high right now. So the low rate mortgage environment that we're in may very well be counteracted by the high unemployment rates. When we think about supply and demand in the housing market, because there is some uncertainty right now about the future and the economy, and there's also higher unemployment rates, the demand for houses may go down. Now, on the flip side, from a supply standpoint, there is concern around COVID-19 and the virus. And so homeowners may be more hesitant to put their houses on the market right now and have strangers coming into their home. Now, I've seen some realtors doing some really cool, innovative things right now, right? So businesses in general have been forced to think a little bit different during this time, and I'm seeing it with realtors also. So realtors are being more intentional about doing video tours of homes to give potential buyers a better idea of what houses look like and bring a level of comfort to the sellers. I'm also seeing opportunities to do live video tours through mobile phones to ensure that the supply remains. So there is a supply and demand may look a little bit different, and homeowners may also be slower to put their homes on the market given the current environment.
What do you see happening in the construction business for like new homes?
Yeah, that's a great question. We did see construction be placed on hold if it was deemed non-essential, and that's been coming back up with some restrictions and ensuring safety. So I think it really depends on where we see the economy going. And time will tell. We're still very early into this. The pandemic was declared only 60 days ago, which is so hard to believe. It's only been a couple of months, which is incredible when we look at all that's happened over the last couple of months.
Exactly. And so one of the phenomenons that we've all been seeing here during this that I don't think anyone expected was the massive rush for home improvement. I mean,
Mm,
if you see if you go to a local hardware store or you go to a mega store like Home Depot or Lowe's, I don't know that we've ever seen lines like this before. Are people turning? Are they financing that, or are they doing it with their own with the money they already had? How are people financing all of that and paying for it? And is home improvement advisable right now?
yeah, that's a great question. I know exactly what you're talking about. I've seen it myself at Lowe's as I was also there getting stuff for home improvement. So it is a phenomenon. I think some people are paying cash for it. Some are potentially using savings, and some may be taking advantage of the low rate environment that we're in right now. Loan demand is still there. So we still see requests for loans coming in. And I think what's happening is people are on stay-at-home orders and they're home a lot more. They're probably getting a little bit stir crazy and looking for something to do. And so why not improve your home? I would always say home improvements are advisable. They they add value to your home. And now is a great time where we have this unique opportunity to pause in our lives, to pause and take care of some of those things that you wanted to get to for the last 5 years. And I think that that's what we're seeing.
Coming back to something you'd said earlier, you talked about how some people are refinancing because of rates. Is that advisable right now? I mean, should people be looking into this, or is like stay away? I don't understand the nuances there.
Yeah, absolutely. So I would say that looking at refinancing is absolutely advisable because rates are so incredibly low. Reaching out to a mortgage loan officer to learn about where the rates are at and what a refinance could look like for you. If you financed your house 5 or 6 years ago, you may be at a 5% interest rate. where now you might be looking more like 3.5%. And so mortgage loan officers can advise, take a look at your unique situation and advise what is best for you. I would say in a low rate environment, it's always advisable to consider your options and see if you're able to refinance to a lower rate.
Great information. Because this region is so medical based, I mean, one of the largest medical communities between Seattle and Minneapolis, the economic realities of our community are very tied to that. I mean, almost 1 in 4 families has somebody tied to the medical industry. So,
Yeah.
what does that mean to this community? Is that a plus or a minus? Because we see the medical community being deemed essential, but we also see elective surgeries not being allowed. What does that? What's the forecast look financially tied to the medical side of all of this?
Yeah, that's a really great question. So, one one may think that hospitals, that their staff would be incredibly overworked for this time, and that may be the case in some hospitals and medical facilities. However, some of the other side of that coin is that hospital employees, some are being furloughed, some are taking voluntary furloughs because those elective surgeries aren't happening. And so, while we're concerned about too many people coming into the hospitals because of COVID-19, uh, the rest of the surgeries are not taking place. And there is a real human impact there and community impact. And so, some statistics that I read around hospitals is that there's a significant loss in revenue that's happened in this first 60 days, particularly because elective surgeries are not happening. And so at a surface level, you wouldn't expect hospital workers to be ones who are taking furlough. But that is a reality of what we're experiencing.
You know, we're really starting to get some questions coming in now, and they're the exactly sort of questions I thought we would get, because you don't often get to talk to somebody who understands finances. So some of these are really interesting. One is they're very interested in what you talked about with refinancing, but are there opportunities if you have been laid off or furloughed or not working because of this? Would a bank consider refinancing you under those circumstances?
Yeah, so that's where you definitely want to partner with your financial institution. So if you are in that scenario, there are options available. So reach out and find out exactly what those options are. You heard me mention deferrals and forbearances. Those apply in housing situations as well. Some may consider refinancing and modifying your loan to assist you in your current situation and put you in a good financial position in the future as well. So the one of the biggest messages here is you're not in this alone. So be very proactive, and don't be afraid to have the real, honest, transparent conversations and see what's available for you.
So we have a question from Christy M. What types of financial decisions should people not be making during this time?
Ooh, that's a good question. I call some decisions quarantine decisions. I think I've probably made some myself there. Decisions that you should not be making during this time. If you can prevent yourself from going into debt in a time of uncertainty, I would stay away from adding more debt onto your plate. There are a number of financial decisions and that you should be thinking about. Uh, there are always opportunities in chaos. The one I would say steer away from is adding more debt onto your plate if you can help it.
So, kind of going along this line, is this the right time to be saving? I think it feels like this is the time where you have been saving for this moment, but is this a time to save? And if so, how do you do that in this sort of time?
Yeah, that's awesome. So I recently read a statistic that said 58% of Americans cannot cover more than $1,000 worth of unexpected expenses due to not having savings. So it said that you should have about 6 months worth of bills in your savings account. And when you think about that number, it can feel really overwhelming. And so this is absolutely a time to consider saving. So, one of the things to think about is as we're on these stay at home orders, uh, taking a look at where you've spent your money. So, with our economies closed down, it creates a unique opportunity to save money that you would have normally spent at the movies or at a restaurant or on entertainment, even. And so that's a way to start your savings. Some institutions offer what's called keep the change programs. And so if you think about how your piggy bank worked 20 years ago, right? You would spend cash at a store, go home and put your change in the piggy bank. And after a period of time, you would have a significant amount of money there. Well, through technology, this piggy bank has been digitalized in that um, you now use your debit card. If you spend $4.50, that additional 50 cents that would round you up to $5 goes right into a savings account. And so 75 cents here, 50 cents there, it's little bits and pieces over time that add up to be a significant amount of savings. So now is absolutely the time to reassess how you spend your money and consider starting to save little bits here and there.
And is that the advice that you give to people who are saving for college for their kids or retirement? Is it this the basic principle during a quarantine?
It really does apply across the board. When you think about college savings, uh, community colleges or state colleges typically cost about $10,000 a year, with room and board adding about 11,000 a year on top of that. And so there are plans available, such as 529 college savings plans that have some tax benefits to it, where parents and relatives can deposit into the savings plan. Saving for college takes a significant amount of time. And so you want to continue adding to those accounts, even if it's only $25 a month. You mentioned retirement. One thing I would say about retirement is remember that retirement savings is a long game. And what I mean by that is there will be market volatility that can make it a little frightening to look at what's happening with your retirement accounts, particularly during times of economic downturn. But the market will recover. We don't know at what point it will recover, but the market will recover. So it's important to remember that retirement is really about that long game.
So to that end, we just received a question. Again, this is why it's so perfect to have you on today.
Yeah.
So is this the time to cash out my 401k, or do I have patience?
Please have patience. If you can help it, do not cash out that 401k. And like I said, it's important to remember your 401k in particular, that is a long game. And so you have to ride out the volatility of the market. Ultimately, that trend line of 401k growth will continue to trend up. What you have right now is market volatility. And so you definitely don't want to pull out of your 401k now when we've seen a dip. You want to ride the wave because it will rebound.
The questions are just rolling in. Here's one. If you watch the cable news, you may be convinced we are headed for something as bad or worse than the Great Depression. Has there been discussions within the banking industry and even at your own institution about how to calm people's fears or how to deal with crazy large withdrawals? And have you seen a rash of poor money decisions related to those sorts of things?
Yeah, so that's a really good question. So whether or not we're going into an economic downturn, you're right. You can see reports on the news or read reports, and many are contradicting with one another. And so some analysts believe that we're going to have a V curve. So a V curve means that you have a economic contraction really fast and deep, but then you rebound just as quick. A U curve is that contraction is extended during a longer period of time and takes longer to rebound. So it's too soon to tell if we're going to have a V curve or a U. And what we see is many analysts contradict one another. So clearly there's not an agreement on what we're going to see. We do believe that there will be an economic impact, but it's hard to tell how deep and for how long. Some of what will be more telling is as our economies open back up and people start to go back into businesses, that will start to give us an indicator on consumer behavior and how quickly we will rebound from this. I wouldn't say that we've seen bad money decisions happening. Not many places have been open. And so during times of uncertainty and economic downturns, we often see what's called a flight to safety. So a flight to safety means that our consumers are saving their money because we, as in general, even I, don't know what's going to happen in the next 3 or 6 months. So many have become more conservative in how they're spending money and just putting it away in savings to prepare for this uncertain time.
So as you've been talking, it struck me, you talked about credible reports and contradictory reports. Where do you go for information? I mean, where you, who do you trust and why?
Yeah, so I take what I call a three-pronged approach. I watch and read mainstream media, so I know what the general public may be consuming from a news standpoint. Then I also go directly to sources, whether they're the experts in a field or I often read Market Watch, for example, which tells me what's happening in the market. So I make sure it's credible sources. And then I do a lot of my own research, specifically looking at data, numbers, and analytics to form my own opinion around what's happening. I think the most important thing about information and staying educated is be curious, be really curious, and ask a lot of questions. Don't be afraid to reach out to the experts. There's no stupid question whatsoever. And so many in their areas of expertise are eager to educate and teach. And so that's something to keep in mind as you're curious. Reach out and ask questions of the experts directly.
So one of the things that I've been wondering is, has the role and strategies of financial institutions changed between how things were handled in 2008 versus how they're being handled now in 2020? Because in some ways it feels different, but I was also much younger then. So
yeah, I was much younger then too. However, it does feel different. What we're experiencing right now is very, very different from the recession in 2008 and 2009. So during that time, it was easy to point to a specific cause of what was happening, what caused the recession. We knew that there was a housing bubble, and it was not worldwide, and it was more regionally in the U.S. Not the entire U.S. was not impacted in the same way. What's different between that and what's happening today is this is a worldwide pandemic that has happened to all of us. And so I think because of that, there's a different level of grace and kindness and understanding and willingness to assist. And so it feels different. It is different. This isn't something that somebody did. It's something that happened. And we're all trying to figure this out together.
Jana, I can't thank you enough for being a part of this. This has been very helpful. Is there anything that you would like to add to all of this to kind of put a bow on it?
Yeah, I would say you're not alone in this. We're all in this together. Together, we will get through this by partnering and linking arms to enhance lives, continue fulfilling dreams, and building our communities as we come back out of this.
I appreciate this so much, and I want to thank everyone who tuned in today, and I'm blown away by how many questions we got. You wouldn't believe how many I didn't get to. We will have we're going to continue to have all these Northwest Passages virtual forums, and we have many more scheduled, and we always make them free, but we also need some help. These things are relatively expensive for us to pull off. So if you see that donate button, please do it. It goes straight to pay for our reporters' salaries. It doesn't go anything for bottom line or anything like it. It's literally just to support the journalists. In the next week or so, we have some really great ones. Next Monday, we have one called Meeting the Mission with Virtual Fundraisers. And we have a great discussion with local nonprofits who've had to turn very virtual to continue their mission. On Tuesday, we have our senior State House reporter, Jim Camden, talking with former Governor Christine Gregoire about how to reopen the state. What will that look like from the business community standpoint? And then on Friday at 11, next Friday, we have Music Makes Us Human, where we're going to be talking to local musicians and about getting music into our life at this time to keep us in a good place. So Jana, again, thank you for being a part of this, and yeah, I hope we can talk again soon. This was very, very helpful.
Thank you very much for having me.
Yes, thank you. And I'm signing off, so I will talk to you all later.